Hi, welcome back to 5 Minutes to Better Books for the Creative Business Owner. I'm your host, Miss Denisa, and last week we talked about the 5 financial statements that every business owner should review on a quarterly or monthly basis. Today and the rest of this month of December, we are going to dissect the cash flow statement. While all financial statements serve an important function in ascertaining the true financial state of your business, the cash flow statement is arguably the most important. As I mentioned before, cash is king when running a business, and a business will quickly shut its doors if it doesn't have enough of it. The cash flow statement also ties together all of the other statements to give a pretty well-rounded picture of the business. So today we're going to kind of go over the basics of the cash flow statement and what it is. So what is your cash flow statement? It is a document that shows the cash that comes into your business and the cash that goes out of your business over a period of time. That can be weekly, monthly, quarterly, however you want to run the report. It will detail the cash that went in, the inflows, and the cash that went out, the outflows. Pretty straightforward. The statement does have 3 different categories. Those categories are your operating activities, your investing activities, and your financing activities. Let's break those down one by one. So your operating activities, these are the activities related to your income statement. And what does that mean? That means that the activities coming related to your revenue and expenses in order to sell your products or service your clients. So the cash related to your operating activities is the cash coming in from revenue and the cash going out related to expenses. The second category is your investing activities. This area is closely related to your balance sheet, and your balance sheet shows the net worth of your business and details your assets and liabilities. So, on your cash flow statement, under investing activities, these are the cash sales and purchases for long-term assets. So, heavy-duty equipment, the purchase or sale of a building, updating your computer equipment, or selling your computer equipment. All of these affect your cash flow, but as you can see, they won't necessarily show up on your sales reports, but you do need to track that you did make those purchases or did sell those items, which will affect the cash on hand. Lastly, your third category are your financing activities. These are loans that you have secured or any cash contributions that you as an owner have injected into your business or company. If your company is in a position to fund other companies, the cash fluctuations resulting from those activities as well would all be under the financing portion of your cash flow statement. So that's a lot of information. There are some links down at the bottom so that you can learn a little bit more about the cash flow statement. And there's a lot more to discuss about the cash flow statement, which is why we're taking the entire month to break it down. So make sure you tune in next week where we talk about how to read your cash flow statement in order to make adjustments within your business. And as always, here are 5 tips when looking at your cash flow statement. Run the report. Number 1, run the report at least quarterly. I suggest monthly. Keep detailed records of all cash purchases. Cash can also mean debit card purchases, anything that depletes the amount of cash on hand in the bank account. Number 3, categorize your cash purchases and sales accurately. Go back and listen to the video again and categorize them according to operating, financing, and investing activities. Number 4, anticipate cash flows by running projection statements. This will require looking at your sales and clients' books in the future. Number 5, budget according to your current cash flow and projections. And if you need a refresher on budgeting, be sure to tune into our budgeting video, and that link is on the screen. Hope that helps. I'll see you next week as we talk more about the cash flow statement.